What's up, guys? This is AmmaJamma. I just hit record so we can go over some questions we have on the newbie chat that people were asking, and I said I would answer them in a video today. I'm done day trading, everybody, so we'll go from there. I'm going to flip to... I'm flipping to trading view, and we'll put shop on because that's the swing we have open. Shop's back green, by the way. All right. Question 1. Amma, when you enter a trade, why do you wait for the end of the day, like shop? I think I already know, but I'm not sure everyone may. Like shop. So that's a good question. So shop yesterday, I said I was getting ready to take a trade. And honestly, I like waiting till the end of the day because in this market, we can see a lot of volatility into the close. As we could see right here, we had this massive sell-off yesterday, you know, partway into the second half of the day right here. And that could really hurt a trade. For me, it's because if the chart starts to go sideways, it's a risk-reward thing too. I'm obviously planning on holding this trade. By exposing myself to a possible sell-off into power hour, it could oftentimes put us in the hole before we even get started. And I feel like that extra few percent of getting that trade early isn't worth the exposure of the risk of pulling back. So I like to take my swing trades later in the day, because then we've kind of sifted through which ones were impulsive, not sustainable breakouts that day, and which ones are actually setting up to be strong. Because you can clearly see that in the afternoon, which stocks held up really well, establish those points, and keep going. I hope that answered that question for you. All right, next we've got AmmaJamma. What qualities make a chart interesting when you're assessing in the morning to determine which tickers to watch for day trades? Oh, okay. Well, there's a couple things. I'll go through today's specifically. So today I had picked shop. No, I didn't pick shop. That was a swing trade. I had roadblocks. I had AMD, SPY, Tesla. It's first of all, outliers. If the SPY is 2 points green, 0.25% green, and because usually we're trading a lot of the bigger names in the morning, and we've got, say, Nvidia only 1% green, and we've got Meta 1% green, but then we have Amazon 2% green. That immediately tells me Amazon's a bullish outlier. That's what we want to look at, because if we get bullish strength into a stock that was already outperforming pre-market, we're usually going to get much cleaner swings and much more eyes on the chart. That's what makes one interesting in the morning, the first point. And the second part is if we're approaching a major level. Like I had Roblox up today, and it sold off, so obviously it didn't work out. But if we put on the 4-hour chart, I want them when they're sitting at a major level. So right here we can see pre-market how Roblox was starting to approach a major triple top. It was a right angle triangle that was very bullish, coming into an insane gap fill. Charts like that, where it's on the verge of a really strong support resistance point. A lot of day traders, and I totally vehemently disagree with this, a lot of day traders only want to trade the actual break. Like for Roblox, so for the Roblox trade, they would only want to trade that break in structure instead of that rejection and coming down. I disagree with that, because the break of structure isn't very common. Most times your trend support is going to hold, you know? So having it kind of like this preconceived notion of I'll only trade it one way, sometimes that doesn't work out too well. So really it's the combination of those two things. And the third one is absolutely without a doubt, I love stocks the few days following earnings when they establish where they want to go. For example, Roblox. It's been about a week and a half. We oversold on earnings. I missed the initial pop, but these type of stocks where we want to immediately see what's going on here. Apple. Let's look at what happened at Apple after earnings. You know, you can see how we came down. We literally off the daily, we bounced off the 200 on the daily like perfection and started pushing. Those type of charts are interesting as well. There's extra volatility and extra volume going into those charts at that time. Overreaction trades. NVIDIA today we traded. AMD today. Those after earnings plays where we get that really, really strong, clean movement. So that's what triggers me to pick mine. I don't like trading in chop levels. So, for example, SPY, when I said it's terrible today, yes, we sold off really nicely. But overall, once we got into this area we're at now, if I'm looking at a chart and it's in the middle of a zone like this, that's not exciting to me. Unless it's down towards the bottom or up towards the top. We don't want to trade in the middle of these zones. Because what are we doing here on the SPY? If we opened today on the SPY and we were at, let's say, right where we're at now, we're at like 130, 530. What are we doing? Where's the clear resistance and support? Yeah, sure, you know, you got the blue line, 530 is a major level, but what's the payout on this? If we take a trade at 530, but we have major rejection at 530.65, and we have major support at 528.86, it doesn't make sense. Pass. On to the next chart. Bread. I've seen your entry strategy. How about your exit strategies? Please forgive me if this has been asked. My exit strategy is a half of a sell at my first trim. And once that happens, I always set stop loss for break even on my final contracts. Guarantee green on this trade. All right. Of course, there's a couple rules to that. If say we have a swing, like let's look on shop here. Say we had a swing puts. Say we bought swing puts right here. Okay. And when we opened, we gapped up. All right. And say this candle didn't happen. I don't agree with immediately closing the position because, it's red now. You know, like on these gap up type swings, this is where a lot of people struggle. Don't just immediately sell because, I'm red on the final contracts. I got to get out. You know, like that don't make sense. Like here's a perfect example right here. Say we trimmed, we still had puts, and then right here, we close and we open the next day up here. And we're like hovering right at break even or out or even 30% down. Like we ended up selling off after that. Wait and see what that trend is. Don't keep holding it. Like you could see with like Palantir, the small account, we sold for like a $4 loss. We gapped down. I didn't immediately sell that minute, but the second I saw we were continuing to sell down, I'm out. But as far as like major places I'm looking to take profits, let me look at what was a big SLV is a good one. It's the areas of confluence. That's where I'm looking to really take profits off the table. So SLV, put the daily on, or I'll put the hourly on SLV. All right. So on this chart here, so we took entry right about here. We took entry in here. We went down. We were red, obviously. But this is a perfect example of like that don't freak out and immediately sell thing. So somewhere in these days, we took an entry. And then we gapped down. But I had told everybody we need to close a day below 24 in order to sell, to leave the trade. Because we're trading sideways. Why are we going to abandon a position that has a support pickup right here? Look at that. Support pickup right there, and it's trading sideways. Give it a little time, all right? And then at that point, as we start pushing up, you could see like, okay, we're going to have resistance here. So that's going to be a sell point for me when we start to approach like that 26.25 or so. And then here's where I'm going to sell a little bit more because that's this resistance wick right here. And then as far as final contracts, if we don't bounce here, I'll probably close the trade. I'm never looking at the percents when I'm making decisions about my trade. I'm looking at the chart. Because right here, we might bounce and make a higher high. We might bounce here, which I would love to see, and start pushing and get a second chance entry. But once I trim 50% off the bat. Because even if it's only a 15% trim, even if we're only up 15%, now let's do the math on this. We're up 15% on a swing, okay? And we sell half. That means the second half of those trades, we could go down 30% and still break even. It gives you extra buffer. Instead of being red as soon as we pull back 15%, now we're still in a winning or break even trade up to 30% down because we sold half those contracts at 15% up. Because at 15% up, if a contract costs $100 and we bought 10 and we sell half at 15%, that means we sold $500 worth of contracts at 15%. That's going to be that's going to be a $75 profit. All right. On the flip side, to lose that $75 off of the 500, we could go down even further than that because we only have 5 contracts left instead of 10. So you could go down double and still break even. Hope that makes sense. All right, what's the next question? What are you looking for, like the swings, like Intel, Run, Zoom, Shop, Snap? Well, they're all different. There's a bunch of different things I'm looking for. I'll pull up Intel. I'm so tired, guys. All right, so Intel. We're on the daily or the hourly. Let me put on the daily. Right here, you can easily see what I was looking for on Intel, and it was the break into the gap. Right here. All right, so that's easy. We want to break into this gap, and we want to fill the gap. Something like Zoom is a accumulation distribution play because the stop loss makes sense. Yes, it's down 2% today, but we can clearly see every time we go below 70 and back above it, we go to at least $71 below 60, and back above it, we go at least $71 every single time for the last year and a half. So give yourself enough room out. It's got a great risk reward at that point, and play the chart. So that's an accumulation distribution play. Hood. The reason I keep holding Hood, and I will keep holding Hood, is if we put the weekly on Hood. It's, again, risk reward. We broke this wick right here from 2022. Once we broke that, I'm bullish. As long as a weekly candle closes above that, I stay bullish. Yes, we have a little double top here we're trying to break at like around 21 or so. But I'm always going to have a little bit of this because what's next? I'll tell you what's next. Let's pop on that volume profile. This is what's next. Freaking payday. Look at the volume through this area here. Look at that. No volume. What does that mean? No walls. It's going to be like a slip and slide straight up. That's when we'll sing some Creed Take Me Higher, because you're going to shoot up the way you shot down. So when we finally break this point, all right, we're going to have some real fun into $33. So you got to be patient. I've got 2026s on this. I just keep adding a little bit and waiting. They're up like 100%. And people are like, why wouldn't you take your profits? This is why. This trade is not done. That's why I do a sprinkle of short-term, long-term, and everything in between. Because These are the juicy plays. When you've got this little teeny volume, that's liquidity. That's a liquidity zone. That's what we want, baby. And we should shoot through there once we finally get it. All right? That's another thing I love in trades. Same thing in Snap. So Snap is one that I've been kind of popping back and going back to, because here's the weekly. Because we have a really strong base right here. All the way back. This is a weekly chart. And look at this amazing resistance, support, support, cup and handle. And then this is another one. Woohoo! When we break that level, we're coming for you. When we get over $18, $25 is on the pipe like that. We'll go from 20 to 25, which is literally a 25% move, which will give you 1,000% plus on contracts. We'll shoot through that in a month tops. This was 1 week candle right here. We put the monthly chart on. You guys got to get out of these like 1 minute charts and really look at what we're looking at here. Like this monthly, we haven't broke it yet. We're having trouble breaking it, but when we do, we're going to be prepared. That's what I look at for charts. I hope that answers your question. Can I explain how I scale in and out for day trades versus swing trades? Do you use the same money? No. Oh, God, no. My day trading account literally has like $25,000 in it. My swing trading account, I have multiple swing trading accounts, 7 figures. No one should ever be only day trading with all their money. Just saying. I mean, I don't know how an easier way to explain that. So, if you're constantly exposing your entire day trading account to a single event wiping you out, it's got to be scary. No wonder you guys are getting impulsive with the trades. Scaling in and out. I mean, if you watch me day trade, you could see how I scale in and out of the day trades. Just watch my videos. I think that's pretty self-explanatory. I do not scale in to 0 DTEs. I cut and I rebuy. KT has a different strategy. That's fine. That works for him. I don't. Because there's too many variables where you've suddenly lost double the money. And a lot of traders I know struggle with that because they don't understand it and don't understand where to scale in. If you don't understand where to scale in and you're just scaling in because you're 30% down, you're going to accelerate your losses that much faster. So really, really learn what that means if you want to use it. I scale into swings all the time. Like this. I have a small position here. When we break $18, I'm going to probably double it or triple it. When should you put a ticker on your watch list waiting for a trade setup? Set alarms, Time Mogul, right here. Like this trade right here. I'm waiting for that break of 1790, and I have a small account. I can't afford to kind of add now. I go to my alarms. Oh, nope. I right click right at 1790. I set an alarm, add alert. We want the price to cross over 1790. Create. When this candle breaks 1790 on whatever time frame it is we decided. What time frame did I decide on that one? Only once. All right, and you can, and like I could go through all these with you. We've got crossing up, crossing down. You can do it where it crosses down, then back up. So I could go where it crosses over 18, back below 17, and back above 18 again. I could literally do that. So, you know, set alarms. I mean, that's way too broad of a question as far as when you should put a ticker on your watch list. There's all sorts of things. RSI oversold, overbought. No, I'm not a big RSI fan unless it's bottoming out, stuff like that. RSI, I see 90% of people that are using RSI and saying it's bullish or bearish divergence, not noticing that at the same chart there's hidden bullish or hidden bearish divergence, because most RSI does do that. There is certain little tricks I do and teach with RSI about day trading and certain levels for confirmation, stuff like that, but that's kind of a little secret sauce stuff. Volume uptick, because a change in volume always precedes a change in price. What that means is, let me find a good stock for that. All right, here we go. So like right here, this candle, giant candle, and then we're going to get, like, usually these giant candles and changes in volume like this and like this and like this are always setting up for something coming. So we've got one right here. We've got one going on. So right here, we had a big, like, volume surge these few weeks. All right. That was the first one. And we ended up actually selling off after that. So that was the precursor to the change in price, meaning we were going up, we're going down. Here's another one. We've had this volume influx here, and we just ripped on through after that, and we're in one right now. So we might be getting ready for a next surge here. But imbalance in volume is a big indicator for me. What are tips for analyzing a ticker's option chain to help in your option trading? For example, determining when spreads are this is a long one. I'm not going to answer this one today. This is not really a beginner question. We'll come back to that. I'm sorry, I can't go through a whole entire option chains and reading flow and stuff. I talked about the volume today, day trading. So if anyone's watching this, look at today's day trading video. And I literally talked about open interest and volume with the AMD contracts in the first, right after market open. So you could go read it there. You could go watch it there. What does it mean when a ticker has high open interest but the volume is NA? It means there's a lot of open contracts. So people are still expecting that play to happen. So you said example McDonald's? Let's see here. I'll go to the monthly. I mean, this is not high open interest. If that's what you're referring to right here, that is not high open interest. So it just means there's 3,000 contracts open on the 280s. These can be bought from last year, 2 years ago, 5 days ago. This is how many are still open. I like to compare open interest on the bullish and bearish sides. That can be telling, but that's all it means. It means there's a lot of people in it, but they're not trading it today. Volume is today. Volume is how many are going in and out today. Open interest is how many are open. Contracts that are open. All right, that's it. I'm going to stop this recording. I hope those questions helped some of you newer traders, and we'll do this again in a couple weeks. Put your questions in the newbie chat, and I will get to them next stream. Please put the questions in there. Bye, guys.